Hey everybody, this is George, and we're going to do a quick midweek show because, well, believe it or not, the Feds, well, they raised prime like what we said they would, but mortgage rates actually came back down. That is super crazy because normally, even though the Feds don't control long-term mortgage rates, what we are seeing, however, is that the Fed rates affect long-term mortgage rates, and actually, long-term mortgage rates, your 30-year mortgages, actually came down. Came down anywhere from about a quarter of a point in most areas. Now, remember, the rates go up and down every day, and it depends on market trends and everything else, because as you'll see here in a little bit, that is what mortgage rates, as far as residential mortgage rates, come from. It's a publicly traded stock. Anyway, with that, let's get the show on the road. First, let's take a little bit of a look at the like, subscribe, and share. Make sure that you are trading, your personal information to subscribe, because the algorithm likes it, and there's no selling, there's no nothing. Make sure that you subscribe. We would love to be able to get our channel to grow, because then more people actually will get this information who are looking at making a decision to either buy or sell. So anyway, there we go. Moving on to the next one. So when we take a look at what's going on with the market, we can see we have 746 homes that came on market, but we had 1,315 that actually went pending. Now, this is important because remember, we said, hey, listen, we have one home that comes on market, we have two homes that are going off market. That trend has been happening really since about middle of October. And you're going to see a slide here. Let's just pop over to it real quick. When we take a look at this, you can see that our inventory that used to be at around 13,000 and change is now down to 6,519. Now, we should be technically between 16 and 18,000 homes. By the time we hit, summer, we should be between 16 and 22,000 homes, and we're nowhere near that. So we are seeing a lot of multiple offers. We are seeing pending homes going off market, and that is a very dynamic thing, because remember, when we look at solds, that's in the rear view mirror. That takes 30, 45 days for you to realize what's happening. So when we talk about solds today, that was solds from last month. And we're looking at that as a, hey, here's the trend. But note, we're seeing, like today, our running 7-day average, we have 1,315 and only 746 homes on market. So we're seeing that continuing to ramp up. Again, something that is going to create more scarcity. More scarcity creates, well, a little more mayhem and bedlam out in the market. Then when we see, situations like this where interest rates are becoming, well, they were already volatile, but when they come down, that pent up demand of buyers, they're coming out, and they're just, they hit it pretty hard. So make sure, one of the key things for buyers, make sure that you are just absolutely rock solid on your financing. Get all the way through underwriting pending an appraisal. All right. Keep in mind, if you need 3 lenders as recommendations, yeah, we'll throw them off to you. Again, they share the same professional and ethical standards we do. Best part is you get some really solid people to work with. All right, moving on. Take a look at this. So mortgage rates. This is from the Freddie Mac side. It says mortgage rates continue to slide down as financial market concerns came to the, I think that's supposed to be forecast over the last 2 weeks, right? However, right, if mortgage rates continue to slide over the next few weeks, look for a continued rebound during the first weeks of the spring home buying season. We're kind of already there. We're already feeling that spring market. Those buyers are definitely out there. Again, every single home that we have written this last week with our clients, we have had multiple offers, and not just 1 or 2 offers. We've had 4 to 9 offers. And so I want to say that there were 10 homes that were offers were presented on over the last 7 days. And it's been pretty interesting because there's The craziness as far as escalations are not necessarily there. The escalations are very modest, which has actually kept things in check. And I think there is that big concern there, again, because we start to run into a few appraisal issues at that point. All right. So you can see here, par pricing, according to Freddie Mac, is 6.42, right? But when we take a look at this, let's blow this bad boy up. Okay. So this is the mortgage rates as we see it today. You can see that there's other numbers that come in. You see the chart on the right-hand side where we just absolutely blossom. And as you can see, it looks like a stock market because it is. Why? There you go. This is actually one of the MBS's mortgage-backed security and treasury markets, and you can see how it is trading. And when the treasuries come down, mortgage rates come down. When bonds go up, the mortgage rates come down. But when the 10-year treasury starts riding up, mortgage rates start riding up with it. It's a really good metric to watch, as you can see right here. So keep in mind that everything that we are doing on a weekly basis, helping you understand mortgage trends, and morning rates and afternoon rates can be completely different, to keep that in mind. And definitely, if you're recently under contract, now there are loan programs out there or lenders that are allowing you to do a 60-day lock without being under contract. Most of them, almost all of them, require you to be under contract. All right. So if you are recently under contract, make sure you are really dialing this in, because we've seen quite a bit of improvement. Again, what happens today in the morning could be totally different in the afternoon. Just saying. All right. When we move over here, let's blow this one back up. Okay. So there was some debate, as they were saying, because as we were talking about that, the feds were talking about increasing the rate anywhere between 1/2 and 1/4. They ended up raising it 1/4. With that, there's also been some volatility with some of the banks and things like that, and how they invested depositor money versus runs on bank. And so I'm not going to go through all that again. If you want to see that, look at the prior week's episode. But as we start looking at everything that is rolling through here, it is we kind of hit a contrarian moment. Feds raised and we didn't mirror. Mortgage rates actually came down, but they're bobbling right along. And when we come over and you take a look at what should we expect the rest of the week, honestly, I think we're going to see maybe a slight downward trend. It's not going to be like a nosedive. It's going to do this, but I think it's going to head in a slight more positive direction for better rates. Unless, of course, we get a different report that comes in or something happens that, takes it back up again, which is entirely possible since it is a publicly traded thing. Anyway, remember, subscribe, share, and like. In fact, smash that subscribe button. People give me a good time about that one, and so I take it in good nature. Anyway, if you have any questions, look, post them back to us. We'd love to answer your questions, and there's no strings attached. See, no selling. Make sure to share this. Share this with everybody that you like. You must like a lot of people. I do, and I share it. So anyway, in the meantime, I will catch you on the next video. Take care.